Hey everybody, welcome to Mortgage Today for Tuesday, September 3rd, 2024, and oh, what a day it was. We were off yesterday, Labor Day. Nice. So markets are recomputing after a holiday weekend. UMBS were up 15 basis points in the first hour of trading. Stock futures were down 29 points. The 10 a.m. ISM Manufacturing report was today's biggest ticket in terms of economic data. It was a bit of a mixed result, with the headline suggesting bond buying and the price component pushing. It was a bit of a mixed bag. It was a bit of a mixed result, with the headline suggesting bond buying and price component pushing back in the other direction. The headline seems to be getting a bit more attention for now, but the reaction has been anything but swift. Most of the movement has been seen at the outset, with new month trading bringing in buyers. S&P Manufacturing ISM came in at 47.9 on a 48 forecast. The ISM Manufacturing PMI came in at 47.2 on a 47.5 forecast, and ISM prices came in at 54 on a 52.5 forecast. In what is historically a poor month for stocks, traders are bracing for fresh bouts of volatility in the run-up to the anticipated start of the Fed's rate easing cycle this month. The swap traders are currently pricing in roughly 1 in 5 chance of a 50 basis point opening cut, according to data compiled by Bloomberg. The jobs market takes center stage this week, with JOLTS on Wednesday, ADP on Thursday, and jobless claims on Thursday, and then the big unemployment number on Friday. Right now, rate sheets are pricing in market speculation that we'll see a quarter-point cut in February at the September meeting in a couple of weeks. If the jobs data this week, though, shows the labor market is weakening, If the jobs data this week shows labor market is weakening as bad as last month's data showed, we could see rates move lower on speculation of a bigger half-point cut instead. Potential buyers are on wait-and-see mode because of all this, which is driving down home sales. Since 6 out of 7 people with a mortgage have a rate below 6%, many potential sellers are reluctant to put their house on the market if buying a new one increases their costs. About 86% of mortgages have rates below 6%. And 76% have a rate below 5%. Once the Fed cuts rates, it probably won't be dramatic enough to trigger a new refi wave unless the economy weakens meaningfully. As with most first weeks of the month, this one has potentially significant economic data every single morning, with ISM Manufacturing kicking things off today was no exception, but it didn't end up having a big impact. Considering the near perfect alignment with expectation, that's not much of a surprise. The flood of new month trading positions ended up being much bigger market mover, well, before the data. Weakness in the stock market also helped drive some safe haven buying in Treasuries. So UMBS closed the day up 13 basis points at 100.88. That 10-year closed out at 3.832, which was down 0.087. But the big one at 100.88, that is putting us still in this range, but it is on the lower side of the range. We have the floor of 100.79, which was a pretty heavy ceiling there for quite a while. So we don't want to dip back below that. And we have a ceiling all the way up there at 101.18. So unfortunately, we need to root for some of our friends, neighbors, and countrymen to lose their jobs.